Hello, everyone, and welcome to OST Live, a weekly broadcast on blockchain, branded tokens, and token economies built on OST. And today we're expanding our discussion to digital asset investing, and we have a digital asset investment firm with us today. We have a representative from the firm. He is the co-founder of KR1, which is a UK-based digital assets investment firm. We have Keld van Schreven joining us today. Keld, welcome to OST Live.
Hello. Hi there. Thanks for having me.
So currently, you are co-founder of KR1, and we'll get into that in digital asset investing in just a sec. But can you tell us a little bit about your background? Before crypto, you were involved in some web startups. Can you tell us a little bit about that?
Yeah, exactly. Yeah. So initially, I went to art school, and then I learnt HTML programming. I downloaded Mosaic browser, and then developed a web um, development agency, one of the first in the UK. So I was pretty early on the web in the UK as one of the first ones, and yeah, I basically started and sold that to a big American ad agency called Leah Burnett. And then I've done startups ever since then. Diary.com is one. Smart Trade app is another, which is a kind of like Square with software. So yeah, I've been doing startups for quite a while. But everyone I meet in crypto, there's lots of creative people there. Quite a few have come from creative areas. So that's kind of been an interesting thread in this whole space.
So when did you sort of transition from startup and web companies over to crypto and blockchain? What was your first interaction?
The Bitcoin question. So I discovered Bitcoin in 2013, just when Cyprus was happening. So Cyprus, the government was seizing bank accounts. Bitcoin was basically started this incredible run, and I just got very interested in the tech at that point. So that got me into kind of invest in it, and then I tried to help a coin called Vicoin, which was like quick block time coin. And yeah, that kind of got me really into the community aspect of crypto. And yeah, I've just been involved in it ever since, really.
So that's fairly pretty early on, 2013. So what's sort of the time frame between like getting into Bitcoin and co-founding KR1?
Right. So yeah, I mean, I was CEO of Smart Trade App for quite a long time, and a couple of the investors, Jeremy Woodgate and Rupert Williams, they were helping me out with Smart Trade. I told them to get some ether. They invested in some ether, and then George, Rupert, and I decided to start KR1 because Jeremy and Rupert's friends were asking them to invest in this new crypto thing. So we tried to raise a private round, but this was pre-ICO time, so the investors just weren't interested. And we went onto a public market called NEX, and we reversed into a Romanian property company, which is quite weird. And we just started trading on that. That was for speed, really, because at that time ICOs weren't really a thing, and we knew there was going to be something special here, and we were the first, basically. So we're the first to invest pure tokens. There was a public company around before that was doing equity in crypto, called Quantilium. But we were the first generally, I think, in the world that were doing token investment as a company on an exchange that anyone could invest in. So that's really, anyone can invest in our company. So it's kind of similar to a token, really. So it's kind of in the ethos of open source. Anyone can go onto the NEX exchange and own some of our shares.
Great. So in essence, I think you already explained it. So you guys are a digital asset investment firm. Can you tell us a little bit about what you guys do? So you mentioned anybody can invest in it because it's on a public exchange. So what's the essence of what KR1 does?
Well, we seed fund decentralized projects. That's what we do. So we look to support entrepreneurs early on with seed funding, and also kind of later stage as well. in the kind of resource they need. So we invest in them, and we have a meetup, and we sponsor all the big London crypto meetups. So we can we can't promise a platform, but we can help them to kind of get some visibility as well in the UK. So yeah, we like to invest and then support as much as we can in that. And sort of from an investor side of view, we're sort of for any investor who is like an average investor, and they want exposure to crypto, but they don't want to get into the wallet thing with Ether, Bitcoin. They don't want to get hacked, or so they can basically take kind of get shares in our company, and they can roll that into their tax efficient ISA vehicle. So it's very useful on that. So you can get tax free advantages of that rather than holding your own crypto. I mean, we advise all our investors to hold their own crypto because they should know what it feels like. But ours is kind of like an efficient way to get involved in this whole movement.
Great. So you have it's called the KR1 share. So does that represent sort of a fraction of each? So you have the crypto projects that you have, or blockchain based projects that you've invested in. So does one share represent sort of that pool of projects that you guys invest in?
Exactly. Yeah. So it's a fractional ownership of all of our assets that we own. So we've done since March 2016, we've done around about 35 investments. That's about one a month. So they get access to those investments that they probably wouldn't have on the terms that we get. And also the kind of fundamental shift is the private movement of fundraising has just swung around massively this year. That wasn't there kind of last year, which is a great shame. So it's because people are getting crowd sale fatigue, scamming, people are not filling their rounds. So people are raising money privately now. That's kind of the theme. So those investors would get locked out of those deals, but we can, by owning a fractional ownership of KR1, they can get access to that.
Great. Yeah, it's definitely like a change, right? Like when you started, you had to raise privately, and then we had this whole ICO craze, and now it's going back to like accredited and private investors.
Yeah, which is a great shame because the whole ethos of this decentralized movement is for, the individual to be empowered and to take control back. And those ICOs, I mean, crowd sales should be like that. And this centralization with the, it's kind of ironic because we're sort of like investment company, but we don't want to see a bunch of just investment companies invest in the project and that's it. That would be ultimately unhealthy, and it just replaces the old crappy model of the Web 2.0 venture capital model where those VCs just invested in all the successful projects and many unsuccessful ones, but there was no spreading of that to the kind of retail investors. And what the exciting thing of this whole thing is that armchair investors led this whole revolution. So it would be a travesty for them to get locked out of it, and we hope that doesn't happen. But there's things like airdrops that have happened with Definity and things like that, which are cool. And it's there are other crowd sales are still happening, but it's important that those projects keep the little guy as the number one guy.
Great. So it goes back to decentralization and sort of the initial concept of Bitcoin of anybody being able to participate.
Exactly.
So do you think it'll go back to being that way again?
Well, yeah, I think we've just come through a phase of it's kind of like going to a really cool house party with free drinks. Everyone's really good looking, and then drunk people come in and just drain all the free drinks and make a mess, and the party gets shut down. That's kind of what it feels. The ICO things feels like now. It just got hit with too many scammers, too many projects. So that a bit of a shakeout is a good thing. And there are really good people with in funds that are helping and support projects. But this movement was there and started with that in mind. So that's the spirit of it. So that spirit should be retained in the way it moves forward.
So do you think sort of like with the drop in ICOs and crowd sales and everything that's been happening from last year compared to this year, do you think this is helping sort of the right companies shine as they're working through it?
Yeah, definitely. I think there's that stat where half the ICOs didn't raise any money at all, and most of them didn't fill their rounds. So the quality, even quality projects are not filling their rounds now. So cream always rises to the top. So good people will get funded for sure. Whether that takes a bit longer and there's a trickier route, then that's the path that's going to be their path. So raising easy money is kind of, that's door is shut, and because it got abused and people just got fatigued by it. So yeah, I think really good projects will get funded. Absolutely, yeah. But it'll take them a longer time, and it might be a bit of a circuitous route to find that money.
Do you have like any recommendations for projects that probably have already ICO'd in 2017 and are just trying to power through sort of a bearish market? Like, are there things that they should be looking out for and doing?
What, from the project side and the investor side?
Uh, so let's cover first the investor side. Like, if they need extra funding in the future to keep the project going, what should they be doing?
They should be committing a lot of fresh code or fixes and showing that they're active in their repos. They should be communicating with their community and enlarging their community. It's kind of like, where's the value? If you see energy and effort, and that's kind of where the value comes out of it. So if you see lots of energy and effort going into something, then value comes out of that. And the project will, if they want to get further funding, will need to kind of prove they're real, and also prove that the problem they're solving, they are kind of on that journey, kind of, and executing to kind of to that mission that they've taken on. So these are really difficult times for most projects, but some are just getting funded anyway privately. So getting fresh funds, it's always really difficult to do a second crowd sale. There's been very few successful ones, I think. Even StoreJ tried it a while ago. It's a kind of a bit of a strange thing to do. So teams have just got to cut their cloth accordingly to what they have, and how they've managed their ether in their and their sort of fiat currency.
Do you think the funding model has changed? So in 2017, it may have appeared that the projects will just draft a model of what they're going to work on and then raise funds based off of that and then build a project. Do you think now it's sort of reversing where they have to at least build MVPs and minimal viable products and get something started before raising any money?
Totally, absolutely. I mean, we even funded some projects just on kind of white paper and really light MVP. Now you need more than that. Even if you got a stellar team and the tech is pretty cool, then you're going to need some form of extra mile. We always call it the unfair advantage. And what's the unfair advantage in the project? It can be the people, it can be the tech, can be the traction they've got, the part, a potential route to a lot of usage. So definitely that's changed. That's changed 100% from last year. Yeah, for sure.
So, for projects that are either trying to launch an ICO this year or early 2019, what would you recommend for those projects? Do you think it's better to just stay away from ICOs right now and try to do private funding?
Well, it's a difficult one. If you've got a lot of inbound interest in your project, then with a community that's large enough, then you've probably got a chance of filling some on a crowd sale. I think Nex, the Neon exchange Nex, has just done a pretty good one. So it depends on the interest from the community. You're much more likely to, a kind of more safe way to do it is to privately close, say, 70–80% of the money with a few funds like ours, and then you can do 20–30% of the rest with the community. Then you'll kind of know that you should fill it. So there's a crowd sale at the moment like Civil, that their kind of crowd sale is quite a way off its hard cap. So if you just do pure crowd sale, you are at the mercy of crappy market conditions, poor sentiment, fatigue, bear market. So yeah, I think for raising funds, you'd be well set to get a handful of investors to give you most of the money, and then if you've got a kind of a community, you can reach out to them to fill the rest of it. But again, if you've got a big community, you can flip that on its head and do most for the community and a smaller raise for the some kind of individuals or funds. That's kind of the safe approach.
Great. So for the most part, for projects that are just like trying to pick up that don't really have a community, definitely doing private investors, and then
Definitely do a private small seed round. I mean, do it. We still see quite big seed rounds. It's kind of project dependent, but a scaling down of you don't need that much money on when you're first kind of you're kind of cranking out your first version of your software. You don't need a lot of money. You don't need multiple millions unless you're a global scale platform project. So there's been a kind of over exuberance on the raising side. So you can just do a lot with 500K, 750K. Can do a lot without anyway. I mean, that all the Web2 startups, most of them, a lot of them were seeded pre 1 million. So yeah.
So going back to KR1, I'm just curious. Before it was known as Crypto Night, is there any meaning behind Crypto Night?
Well, it was a fun name. I thought it'd be cool, but we got kind of a letter from Warner Brothers to stop using it, which is only because we applied for a financial trademark. If we hadn't have done that, they might not have picked it up. But yeah, it was a fun name at the time, and I think it's much more mature now to have our name KR1, and yeah, it was great at the time. So yeah, we desisted from the Warner Brothers letter, and yeah, so we're pretty happy with our name.
Yeah, that's interesting.
Yeah,
so going back to the projects that you guys look for, what is classified as a digital asset?
it really represents a kind of unit of exchange on a chain, on a blockchain, and that's kind of a verified and immutable unit on that chain. And it's the way that chain can verify transactions or execute a smart contract. It's kind of like the fuel in a car. So it needs the wheels to turn, the engines to kind of start moving. So yeah, without the token and the chain on the blockchain, it kind of can't it can't work like an engine, as it were.
So you guys invest in early stage blockchain projects, and earlier we were discussing how like the model has changed between just having a white paper and raising money off of that to having more than a minimal viable product today. So what is classified as or labeled as early stage in blockchain?
Yeah, so early stage is kind of like a bit of a wide remit, really. But you've got to have a mission. You've got to have the technical understanding of how you can achieve that. And you need the kind of framework, it's like a map, really, of I want to get from A to B. We want to see your map. We want to see that you can understand the obstacles in that map, what you'll need to get to that point, and can you communicate in the language that we understand. Things like, can you make good financials, and can you kind of the code you write, is it good code? So you need to have ultimately you want to be as far down that track as possible, but we like to see an unfair advantage, whether it be the people that are making this project, the kind of tech that's kind of being implemented, or the traction. There might be some customers or users. That might be the thing that will give it the unfair advantage, is that it puts you over the other sort of projects that might be on that same path and same mission.
Great. So that unfair advantage helps you stand out from the hundreds of other projects that are going on at the same time.
Exactly. But the unfair advantage can be someone who's just relentlessly executing on that, in that journey. It can be someone who's impressively being thrown a load of obstacles by things, because this whole thing is you're on a shifting sand the whole time with the tech underneath whatever blockchain you're working on. They are going through fixes and changes and people working on it. You're on a shifting sand, so we like to see people. The unfair advantage can be people who are just very kind of exceptional in either coding or thinking about the whole issues that they're working with. That could be your unfair advantage.
Yeah, definitely. Whatever blockchain it's built on, this is still an early industry, and things change from one week to the next.
It's like Web 2. When people were building applications on Twitter and Facebook, Twitter and Facebook changed their APIs, and then it's like, oh crap, you can't use that. So really, kind of innovative entrepreneurs were like, they'd work around those issues. So this is nothing new. It's kind of we've been here before with Web 2, and the Web 2 companies that survive learn to adapt and change on those. So yeah.
So KR1 invests in projects that are working to form the Web3 infrastructure. Can you talk a little bit about Web3 and what it is and how it compares to Web 2?
Yeah, exactly. So Web 2 it's kind of like a legacy infrastructure of the old internet, which was HTTP, and it's really the kind of the irony is that web was a decentralized network. That's where it started, and then the technology has always been that, and then the web came along, and you've created these citadels of centralization that have just become kind of against that, as it were. So those are kind of quite vulnerable in their security. They demand a lot from you, the end user, the information that you let them have. And also it's kind of like a creaking infrastructure. So the torrenting infrastructure that was around sort of late 90s with Napster and Skype, and the technology that creates Skype, is kind of blockchain. It's peer-to-peer, so it's kind of old. It's kind of like an iteration, but Web3 is like a wholesale replacement of. It's a new start with a new kind of infrastructure. So that is going to solve the privacy issues, the hacks like the Equifax hack, the Yahoo hack. I mean, you just won't get those with Web3 services. So it's going to be more pro-individual. Plus, you've got a ton of things that haven't been possible before are going to be invented, like giving the example of the Indian farmers who could never have insured their fields before. And now with a service like EtherRisk, they, for not much money, $10, they can insure their field against terrible weather. So EtherRisk will take a snapshot of that field and look at the weather for of the last 10, 15 years and work up a premium and pay in crypto. If there's terrible weather in that phase you pay the money for, you'll get automatic payout. So you just couldn't do that in a centralized service without cost and overhead. So Web3 is going to take away a lot of the cost and overhead that Web 2 had, and centralization. You're just going to see a load of really new, exciting services come out that just have not been possible before because of the censorship resistance, immutable technology, which is the blockchain. So that's kind of the excitement of where we can go with this.
Great. So it's an iteration of peer-to-peer, right? Because peer-to-peer has been around,
Exactly.
like you mentioned, since Napster. So is one characteristic of it, like say peer-to-peer, PayPal can can be described as peer-to-peer, right? Because I can send anybody money, but there's a central authority, which is PayPal themselves. Is that sort of the change, right? It becomes
Exactly.
trustless in a way.
PayPal without the PayPal centralization, so it's all run on the code, which is on the immutable blockchain. So you've got, you're taking away that sort of overhead, and the kind of anything that involves a funnel point can be compromised. It can be like rent seeking, it's got cost, it's got poor performance. So all these things are kind of the promise of decentralization. So that's kind of, exactly. So the example you just said is a very good one. Yeah.
Great. So going to KR1 in the projects that you guys have invested in, what are some characteristics that these have in common? I'm just gonna pull up a screen share of your site so the viewers can see.
Right. I think what I think it was. I think if you were to look at a common theme, they would be really the people behind the projects and their track record on being a star in coding or in finance or gaming or whatever it is. There'd be some genius within that team that would be like, that if you're going to invest in them, whatever problems came along, that person would be, and their team would be able to figure it out. That's the key thing. If they investing in the people that will figure it out if everything goes wrong, they're building on these platforms that are changing the whole time. Something changes, these guys and women can figure this out, figure this out. That and a combination of timing, the people that have really made big money and made a big bet early, all the people I've met. I remember, I'll never forget, I met this guy called Tai Tran, and he was building a photo sharing app. And this was way back. And he got acquired by Facebook. And he was basically, he made a big bet early that Android, that no one was creating a photo sharing app for Android. And I think Instagram were just doing iOS, and he just got scale before he put a big bet early. So people, you make a big bet early on stuff, it can go wrong, but you can also go very, you can do really well out of it. So you want to look always for the outliers, the people that are slightly quirky, slightly different. Those are the things that I really find. Those are the things that are really interesting. Talented people doing something different where the herd isn't is key.
So how long has KR1 been around? When did you guys get founded?
In March 2016, I think we went public in November 2016. We made our first investment in Singularity DTV, which was $5,000 in, I think, around that time. And then Augur, we bought some. We've only bought about 3 things on exchanges, Augur and Ethereum at the time. So yeah, we kind of got in early, and then Melonport came along, and then I knew when I first saw Monotalk, I knew there was something really special with that team, and we were basically first investor in supporting them, and we just knew, and we kind of, when I talk to fund people now, they said, "You did what?" I mean, we put half the fund into Melonport, which you just don't do, which was like fund suicide. But as an investment company, we knew they were going to make it happen. So we did really well out of that, and then that was it really. From that point on, we were kind of set.
So through the journey, within these past 2 years, what are some things that either you personally or KR1 as a company have learned, either about investments that you have done or just the crypto and blockchain space in general?
Yeah, I think for me personally, I think history repeats itself, and we've been through a lot of this stuff with Web 2. It's just a different time and a different story, but essentially it's really bright young people making amazing things with the tech that's on time at that time. And I think that kind of history aspect for me is really, it resonates more and more. I think there's a realization we didn't really know. We were all waiting for this to happen. It happened much quicker than and much bigger than we thought. So we're kind of just taking a bit of, we're kind of chilling a little bit because it's been so fierce, the movement. But I think one of the things we've learned is that crypto will seep into many things in our world that we just didn't think of prior to that. We just thought maybe Bitcoin, some smart contract implementation of stuff. But it's really starting to seep into many different opportunities. And I think, you know, the importance of it gets greater. I think I really do. Yeah.
So, knowing what you know today, through your experience, is there anything that you would have done differently over the past couple of years? Like, were you speculative about the industry in the beginning?
I definitely. I think I was. You know, I kind of speculated as much as I could, so I'm pretty happy with what I've done. I'm kind of, it came as a bit of a rush to us last year. We were when we were doing, there was no one else really doing what we were doing at that time, and it was kind of like a bit of a rush, and it just got crazy very quickly. And I feel a bit, it just didn't have the time where we could just, you know, the financial craziness of it all kind of overshadowed what's still going on, which is amazing development of projects. The commits on all the repros and GitHub, they're all kind of like that. You know, they're all, the teams are growing. You know, it's still, it's getting bigger, but I just wish we would have not had that crazy time in last winter where it just blew up so big. I think it's a shame. Yeah.
Yeah, and hopefully there'll be some recovery to that.
I know there will be. It'll be fine. But those projects need that time to, you know, to just crack on with the mission in hand. You know.
So, you know, as we're ending the show, what do you think? What do you think will be the future of these projects in crypto? Like, when do you think will be the time when these projects in the industries sort of matures?
Yeah. So I think we're still, you know, I play around this stuff the whole time. It's still, it's not, a lot of it still doesn't work that well. So I think we're at least a couple of years off any proper volume on it, on the non-financial stuff anyway. Financial stuff is happening now, but yeah, sort of, you know, just for infrastructure play, I think you've got really big stuff going on with blockchain, and you know that's going to be in the next 1-2 years. That's not consumer based. There's always this, you know, focus on consumers coming onto blockchain. It's going to be a wholesale fundamental shift in infrastructure and IT anyway. So it doesn't need, you know, it's going to do a massive job in faster, cheaper, quicker, just in stuff you'll never see, and it's all invisible. On the consumer app side, you know, it's a couple of years off. All these new services like EtherRisk and those Nexus Mutual, that's going to be, you know, to any kind of volume, 2 to 5 year probably gap. But you know, there's some amazing things happening, like proof of stake. Staking is going to be a massive. It's going to be a revolution for financial empowerment for individuals, and you're going to see these staking funds that are going to come along and just do insane numbers and be like the new fixed income type of investment vehicles. So basically, staking, you know, you can earn from 5 to 100%, you know, on your tokens a year, and people are going to be staking and living off those staking dividends. You're going to hear those stories, and that's going to be a big kick for just one strand of crypto. Staking's coming around really quick, and that's just going to suddenly be like bam, it's going to be everywhere. So everyone's going to be talking about staking. And there's, you know, on the investor side, everyone talks about, it's the paradox of centralizing decentralized tech. So all the institutions investing in decentralization, which is kind of like a complete irony. because none of us really wanted decentralized people to come in, but now we're waiting for them to come in. So there's lots of ironies and paradoxes in this whole thing. So, custodianship, institutional money will come in, and that will rise the market. That will be, so that's going to be a great thing that will happen. But I think, there's lots of amazing services that are just starting to get their products out, so people can start playing around on them. It's things like playing on Super Rare, this NFT platform. I mean, these things are great. I mean, they are live, they're working. You've got Augur now, which you can do live transactions on, which is pretty incredible. There's really big things that are now just coming out into the wild. So we're going to be in a fascinating time, I think, for the next, from now and from here on in, really.
Great. So as far as the infrastructure and technology, it's still like moving sand. But you believe tokenization and just the blockchain in general will be more applicable to more things, and when we'll start seeing that in the future.
Yeah, definitely. I think you've got, everyone talks about collateralizing equities on the blockchain, that's security tokens. That's going to be a thing. You've got stable coins, which are much needed, and then you can have a lot more reliable financial services. That's the thing that's coming. You've got wallets just for people that are really easy to use and don't send tokens and coins to a string of numbers that doesn't exist. That's coming. All these things are like layers in the movement that are just, you need kind of all of them to work. So they're just, they are way down the track on these things. So it's just, we just got to keep supporting these projects and just waiting, and it's not going to be done overnight for sure.
Great.
And building a great platform, of course.
And it's been a great conversation, learning about the characteristics between blockchain-based projects and the decentralized world, and now moving on from Web 2 to Web 3. So where can people learn more about KR1 and or yourself?
So they can go onto our website, is kr1.io. They can follow us on Twitter, which is KR1 PLC, I think. They can come to our meetups. We run the Crypto Night with a K, and as in nighttime, Crypto Night on meetup.com in London. They can go to CoinScrum, which we sponsor, East London. But yeah, they can follow us on Twitter, Medium, or our website, kr1.io. So yeah, we put a blog post out every month of all the cool stuff we're doing, and yeah, so they can find out about us there. Yeah.
Great. Do you have any upcoming meetups?
Not yet. There will be one this year, but yeah, which will be pretty. We always have. I think last time we had Definity, Foam, and Flying Carpet, which was pretty cool.
And that's based in London?
Yeah, in London. So we're going to have another cool one coming out for sure.
Great. And for the listeners out there, be sure to check the description down below. I'll add those links down there if you want to check out KR1 or their meetup. And yeah, be sure to subscribe to OST Live on iTunes, Spotify, anywhere you listen to podcasts. Next week, we're going to continue this discussion about digital assets and investing with somebody from Kinetic Capital. So that's coming on the next episode next week. And thank you for all of you tuning in live on YouTube. And yeah, we'll see you guys next time.